Let's face it, the traditional path to wealth is broken. Work hard, save diligently, and hope for the best? That's not a strategy, it's a recipe for mediocrity. There's a better way, a smarter way, asymmetric investing. This isn't about gambling on risky bets. It's about understanding the power of calculated risks. Imagine a scenario where your potential gains far outweigh your potential losses. That's the essence of asymmetric investing. It's about identifying opportunities where the upside is significant, while the downside is limited. So, if you're tired of the slow and steady approach to wealth building, if you're ready to break free from traditional investing, then buckle up. This is your guide to unlocking the power of asymmetric investing, your secret weapon to financial freedom. Asymmetric investing isn't about avoiding risk altogether. It's about understanding and managing it intelligently. It's about shifting your perspective from risk aversion to risk optimization. In traditional investing, risk and reward are often seen as directly proportional, higher risk, higher reward. But what if you could flip that script? Imagine investing in a company on the verge of a breakthrough. Their new product has the potential to disrupt the market, but it's still early days. This is where asymmetric investing comes into play. You recognize the potential upside. If the product takes off, your investment could skyrocket. But you also acknowledge the risk. The product might not gain traction, and your investment could lose value. However, here's the key. The potential reward far outweighs the potential risk. Even if the investment doesn't pan out, your losses are limited. But if it does, the gains could be life-changing. Think about early investors in Amazon or Bitcoin. They saw the potential, took a calculated risk, and reaped the rewards. Asymmetric investing is about finding these opportunities, these hidden gems, and capitalizing on their potential. Asymmetric investing isn't about throwing darts blindly. It's about approaching the market with a strategic framework. Here are some key principles to guide your journey. 1. Focus on undervalued assets. Look for companies or assets trading below their intrinsic value. 2. Seek catalysts for growth. Identify potential triggers that could propel the asset's value upwards. 3. Manage your risk. Determine your risk tolerance and invest accordingly. Diversify your portfolio to mitigate potential losses. 4. Be patient and disciplined. Asymmetric investing is a long game. 5. Continuously learn and adapt. The market is constantly evolving, so stay informed about industry trends, economic indicators, and emerging technologies. By adhering to these principles, you can navigate the complexities of the market with confidence, making calculated decisions that align with your financial. Section 5. The power of deep value. Unlocking the potential of low PE ratios. One of the key metrics that Tykr and other value investors use to identify deep value stocks is the price to earnings, or PE ratio. Simply put, the PE ratio tells you how much investors are willing to pay for every dollar of a company's earnings. A low PE ratio, especially compared to industry peers or historical averages, can indicate that a stock is undervalued. Think of it like this. You're at a flea market, and you stumble upon a vintage Rolex being sold for a fraction of its market value. That's a low PE ratio in action. You're getting more value for your money. But it's important to remember that the PE ratio is just one piece of the puzzle. It's crucial to delve deeper, analyzing the company's financial statements, understanding its business model, and assessing its future growth potential. By comparing the intrinsic value to the current market price, you can identify stocks trading at a discount, unlocking the potential for asymmetric returns. Section 6. Cultivating the millionaire mindset, shifting your perspective on wealth. Achieving financial freedom goes beyond just picking the right stocks or understanding financial ratios. It requires a shift in mindset, a willingness to embrace unconventional strategies and challenge traditional financial norms. The millionaire mindset starts with believing that financial freedom is attainable, regardless of your current circumstances. It's about viewing money not as an end goal, but as a tool to create the life you desire. It's about embracing a long-term perspective, understanding that wealth building is a marathon, not a sprint. The millionaire mindset also encourages you to think outside the box, to explore alternative income streams, and to leverage your skills and passions to create multiple avenues for financial growth. It's about embracing a mindset of abundance, recognizing that opportunities for wealth creation are all around us. Section 7. Diversifying your income streams, creating multiple paths to financial abundance. The millionaire mindset embraces the power of diversification, not just in your investment portfolio, but also in your income streams. Gone are the days of relying solely on a 9-to-5 job for financial security. Today, the most financially savvy individuals are creating multiple streams of income, building a safety net while maximizing their earning potential. This could involve starting a side hustle, monetizing your skills through freelancing, generating passive income through real estate or online businesses, or exploring the exciting world of digital assets and blockchain technology. Remember, diversifying your income streams isn't just about earning more money. It's about creating financial resilience, reducing your dependence on a single source of income, and having the freedom to pursue your passions without financial constraints. Section 8. Your journey to financial freedom. Actionable steps to start investing today. Ready to embark on your journey to financial freedom? Here are some actionable steps to get you started. First, educate yourself. Knowledge is power. Read books, listen to podcasts, and take online courses to deepen your understanding of investing, personal finance, and wealth-building strategies. Next, define your financial goals. What does financial freedom look like to you? Set specific, measurable, achievable, relevant, and time-bound, SMART goals to guide your actions and track your progress. Then, create a budget and track your spending. Understanding your cash flow is crucial. Track your income and expenses, identify areas where you can cut back, and automate your savings to ensure consistency. After that, start investing now. Time is your greatest asset when it comes to investing. Even small contributions, invested consistently, can grow significantly over time thanks to the power of compounding. Section 9. The power of compounding. Watch your wealth grow exponentially. One of the most compelling reasons to embrace asymmetric investing and start your wealth-building journey today is the power of compounding. Often referred to as the eighth wonder of the world, compounding is the snowball effect of earning returns on your returns, leading to exponential growth over time. Imagine a snowball rolling down a hill. As it gathers more snow, it gets bigger and bigger, picking up speed and momentum. Compounding works in a similar way. The earlier you start investing, the more time your money has to grow, and the more significant the impact of compounding becomes. Even small amounts, invested consistently and given time to compound, can grow into substantial sums. Section 10. Take control of your future. Embrace the world of asymmetric investing. The world of finance can seem intimidating, but it doesn't have to be. Asymmetric investing, with its focus on calculated risks, deep value opportunities, and the power of compounding, empowers you to take control of your financial future. It's about shifting your mindset from one of scarcity to one of abundance, recognizing that opportunities for wealth creation are all around us. It's about embracing a long-term perspective, understanding that true wealth is built brick by brick, decision by decision. So, what are you waiting for? Take the first step today. Educate yourself, define your goals, and start investing.